US inflation comes in bang on forecast. Welcome to Market Insight, I'm Thomas Warner. The Core PCE Price Index rose 2.8% in the 12 months to April. Earlier on Friday, trading kicked off with news that Eurozone inflation rose even more than expected in May. The ECB is all but committed to its first rate cut when it meets on Thursday, but the Fed's next move is the subject of fierce speculation. With me to help find some answers is Hetal Mehta, Head of Economic Research at St James's Place. Fantastic to have you on, Hetal. Thank you very much for your time today. Let's start with those US inflation numbers. They are hot off the presses. Tell us what the figures mean for the timing of US rate cuts.
So I think given these numbers were in line with expectations, they're for April and we're already at the end of May now, I don't think these numbers will have massive implications. The data we've had so far this year in terms of the bigger picture has been pointing to more inflationary pressure than I think the Fed would have liked to see. Markets have already pushed out their pricing of rate cuts to later this year, and I think that's fair. Certainly, there was way too much priced in earlier in the year as that inflationary information has become more and more available. I think it's right that that gets pushed towards later in the year. The complication we have for the US is obviously around the timing of the election and whether the Fed feels it necessary to just try and get a bit of the easing cycle done on this side of that November election. But I think overall the very gradual rate cuts story is in place. It's just a matter of whereabouts later in the year that starts.
Hetal, just how much of a factor do you think the election will be in their considerations? Because obviously opinions do vary on that.
So I think by and large they're not very political. They want to really focus on the inflation data, the growth numbers that we've seen. I don't think they are politically minded in terms of their policy actions. I think it's just around the timing, and they are focused on the fundamentals because they don't want to be maybe cutting rates during an election period in order to actually then be accused of being political.
Well, there is at least one rate cut for the Eurozone pretty much baked in already. We did see the inflation print come in ahead of expectations this morning. Where do you think the ECB go from here?
So, as you said, the June rate cut next week is all but certain. I think there'll be certainly people within the ECB who may be kicking themselves for pre-committing. We know famously some previous ECB presidents would never pre-commit. I think that one cut happens and then there has to be a lot of deliberation around how sustainable the recent pickups are. I think overall we will still see inflation move lower, but there are lots of risks around that. Energy prices have been picking up. The labour market in Europe is actually very tight. The unemployment rate has been falling more than most people expected. So there is still some underlying inflation pressures. Again, it's about how much they cut. I don't think we're looking at rate increases at all on the back of some of the inflationary pressure.
Hetal, if we do start to see some divergence between the Eurozone and the US, where do you think it leaves the UK sort of stuck in the middle? Inflation is looking pretty sticky here as well.
Yeah, I think the inflation dynamics for the UK actually are very strong. We have much higher wage growth, services inflation running much higher here. So timing-wise, and so with the election announcement, any expectations people had of a June rate cut are completely off the table, I think. But for the Bank of England, I think the fundamentals really do point to a much later start to the cutting cycle. And in some ways, having the election out of the way earlier than people expected may help just clear that path so the Bank of England can once again focus on fundamentals. But the inflation picture is sticky. The divergence issue will kind of come through in terms of exchange rates. Certainly, I think that's something the ECB is probably more mindful of than the Bank of England. So being too far ahead in terms of cutting, certainly for the ECB, will be problematic from a currency perspective.
Let's just take the chance to zoom in a little bit on the UK. We had some more data today, some quite strong signals. UK house price growth rising. We also had Lloyds Bank saying that business confidence is at an 8-year high. Were you surprised by any of those figures?
So So I wasn't too surprised by housing market numbers. We've seen recently quite a lot of the underlying indicators from, say, the RICS survey or credit conditions, all pointing towards some gradual pickup being likely. This is obviously going to be noise month to month, but overall, not surprised to see the UK housing market pick up, and I think that's likely to continue. In terms of business confidence, again, when we look at the purchasing managers indices or other indices, there is that gradual, I think the relief that the recession was very mild and largely behind us is starting to just play into a bit more optimism.
Hetal Mehta, Head of Economic Research at St James's Place. Many thanks for your thoughts today. And that is Market Insight. Don't forget, you can watch more videos on Reuters.com.